Hello, everybody. This is Stephen from Share Navigator with a market overview for the week beginning April the 3rd. And boy, how quick those weeks have been flying by. So, again, just have a look at our current positions here. Anything highlighted in green here we've sold out of. So, we made a good return on Southwest and Apple. Royal Caribbean is performing really well. We're still holding it. We're not going to sell it till it gets around that $110 mark. Striker, we're doing really well on that as well, and we're getting set to sell that this week. So last week they paid out, or it went ex dividend, so we were waiting for that. So this week we're definitely going to sell out a Striker and take the profit off the table there. Whirlpool, it's kind of gone stagnant again and started to make a bit of a move for us, but we still think it's a buy at these levels with a view to selling that at 210. And Abvoi is something similar. Again, we still think it's a buy at these levels. It's only trading at 65. We have a target price of $90 in that stock, so we're going to hold that for the medium to long term. In terms of stocks that have been underperforming for us, Gilead, um, as you know, here we have a entry price here of 84.68. It's currently at 67.92. Now our 12-month target price on that is $75. So we're going to look to sell and just get out at those levels. So when we get over that $70 mark, we would look at some sort of a repair strategy. Target is the other one. We've got short puts out on that at the moment at 62.50. With the premium, etc., that we're going to take in, it looks like we'll be purchasing those shares for around 61, 62. They're currently trading at 55. So it looks like on April the 24th, we'll get assigned our shares of target. And what we will do then is initiate a repair strategy. Our target price is $65. In terms of our watch list, uh, here are the stocks that we're looking at to try and get into our portfolio. Ford is popped in there now. Our target price is below $12. So this is a great reason why you must get your target buy prices as well as your target sell prices, because sometimes you can jump in and chase the market when you really should do your fundamental analysis and evaluate what price do you actually want to buy the stock for and what price you want to sell it for, and then you stick to your guns. You don't start chasing the market up. And that's Honda is a or Ford is a classic reason why. Remember, Ford was trading at 12.60, 12.70 not so long ago. We could have jumped in then, but they had a poor earnings report and they're down below 11.64. We're still confident on the stock, so we're happy to own them at $12 and just ride this one out for the medium to long term. Look at the dividend they're paying here, 4.74%. So if you think about it, if we held that for the next 5 years, just on the dividends alone, assuming they continue to pay them, we'd have made a 25% return from dividends alone. Um, what we want to do as well, you can look at this, you can just pause this video and look at our target buy prices and target sell prices for each stock. Some stocks are really starting to get into range, but what I wanted to focus in on was eBay and the importance of doing your fundamental analysis. So let me bring you into another spreadsheet here. And what you're looking at here is we need to change that to eBay here. So this is the spreadsheet I shared with you last week. This is what we're going to talk you through on the seminar that's upcoming on April the 22nd. And the first thing we filled in was the ticker symbol was eBay, the current share price, the earnings per share for the last 12 months, the dividend yield, it's not paying a dividend, what the size of the company is, it's worth 37 billion, and its current PE ratio. So then we get into something called a historical analysis, and this is where we're looking at really you're trying to convince yourself that there's evidence of sales and earnings growth with this company. So the thing about eBay that you need to be aware of, and this is why you have to do your homework, and these numbers are all going to be skewed because eBay and PayPal used to be one company. And about 2 years ago, they split into two separate companies. So obviously, that's going to impact the revenue figures and the earnings figures. So, for example, if you come along here to 2014, you can see that eBay earned 17, or they sold 17.9 billions worth of product, and then there's a massive drop to 8.59 billion. Now, if you didn't have the knowledge that it used to be two companies in 2014, you might assume, oh my God, it had a terrible year, when in fact it didn't. It was just that the company divided into two. So that's the importance of doing your fundamental analysis in a company. You really got to go back. If you see anomalies in sales and profits, don't necessarily take it that there's a big problem with the company. It may be simply just down to the fact that the company split or sold off a division. So you got to be aware of that. So cutting to the chase here with eBay, we've put in all of the numbers here in terms of shares outstanding, dividends that they've paid out, debt to equity. So the dividends here, for example, they've paid no dividends out. They're not a dividend paying company at the moment, so there's no dividends go in there. And we've looked at the shares outstanding as well. Moving on forward, we start looking at the forward growth then, and of course, the market is more interested in what a company is going to do going forward than what it has done in the past. And if you think about it here, we're looking at sales growth, yes. We're looking at year on year growth, yes, that's good as well. We're looking at earnings per share growth. So you can see a big minus 68% here. And again, that's just another anomaly there. There was once off items this year, which is the reason why their earnings per share was at 635. So you'd think this is a big drop. It's not. And you're focusing in here in the growth into the next year as well, which is over 10%. So this is the thing we're liking what we're seeing here as well. So we do have evidence of growth here. So that's a yes as well. Looking at historical PE ratio analysis, again, the big anomaly here is the year that they split. So you can see here they split in 2015. You can see the PE ratio kind of was a bit skewed that year. So you'd nearly want to take that out. We've included it in our numbers. So the last 5 years PE average was just over 19. But that would probably be higher if this number was taken out of context as such. So that will skew our targets slightly. Our low target, obviously, because our low target is based on the worst case scenario PE over the last 5 years multiplied by the forecasted earnings, and that would give us a 26% drop. But it's unlikely the PE ratio would trade at 11. It hasn't done so in 5 years, and that was only because of the anomaly in the split of the eBay and PayPal franchise. So the average target though we're getting is $43 for the stock. So if you think about it, the current share price for eBay is at 33. That's a nice jump there, and it's given us a 29% return there. So that's pretty good. And then we look at it on a price to sales level as well, just to try and give us some comparisons here. And again, there's a big skew in terms of the price to sales for the 2015 numbers because of the split that occurred that year. So you'd nearly want to discount the low target. And the average target you can see is coming in at 33.75. Having said that, if look at the difference this makes bringing this back into normality, you can see it making a huge difference here. So we're talking about, again, back to our average growth here of over 11% here. 37.40 is the price to sales number is bringing us. So you're talking about $38 to $43 target price for this over the next 12 to 18 months. So the real message and the reason why I did this exercise here with eBay, we're going to go through it again on the seminar, is just to show you that, looking at the numbers is not just good enough. You got to go and look into the company news, look into the company reports. Why was there a big sales drop? And as it turns out with eBay here, it was simply because the company split in two, the PayPal division was split off, and that's why the sales dropped in that scenario. So it's important that you go and do your homework in each stock before you invest, and then satisfy yourself as to your entry price. So from here, what we have done is got our target price here of anywhere between $38 and $43. So our rule of thumb here in Share Navigator, we want to get 20% upside in order to make it worth our while buying the shares. And that's why our target price for eBay, as we come back here to our spreadsheet, our target price for eBay is down here at $31. So that gives us our 20% upside if we were to get out at the low end or the low range of our target range for next year. Okay, this is Stephen from Share Navigator. Just a couple of things this week to look out for. In the US, you've got the retail sales coming out on Friday. The first week of the month usually has a lot of data coming out that can impact the markets. We also have a couple of geopolitical events as well. Trump and the Chinese premier meeting, and that should be interesting as well. So a couple of geopolitical events, but we're now coming back into earnings season. So the first quarter is over. You're going to see companies start to report now, and this will be the key driver of the market going forward from here, in our view, until we see some movement on the tax agenda in the US. The markets will probably focus back onto earnings and see what the earnings growth is like. So if earnings start to disappoint again, you may see some money coming off the table. If earnings satisfy and keep investors happy, my view is the market will go sideways, and then we will look to what the Congress do in relation to tax cuts, etc., like that. Okay, this is Stephen from Share Navigator with a market update for the week beginning April the 3rd, 2017. Thanks a bye for now.